This is Chris Carey, who's the principal at Stripes Group. Thanks so much for being with us, Chris.
Thanks for having me. Great conference.
So, look, there's a lot of investors in the space right now.
Yep.
What is the Stripes Group?
So we're a consumer and technology growth equity firm based in New York. We've got about $2 billion under management. We invest $10 to $100 million into high growth brands, and we look for, in the consumer space, really authentically built brands with compelling founder stories, and most importantly, a really differentiated, exciting product. And so food and beverage is a great place to be investing today because there's so much authenticity around the brands being created and also some really interesting products in the marketplace today. And I think that our approach is interesting in the sense that about 50% of what we invest in is traditional consumer packaged goods, and then 50% is tech-oriented with a blend in between of digitally oriented brands. And so we're investors in companies like Grubhub, like Blue Apron, like Reformation, which is a direct-to-consumer women's fashion company, as well as some media properties like Refinery 29. And so I have some good connectivity to...
It's like all my favorite websites and all my favorite things to eat. So
All right.
There you go. But sorry, continue.
Oh, so just in terms of, as it relates to investing in consumer products companies, we have a really interesting network and connectivity across what's working well in digitally native brands as well as in the media space. So we can be supportive as companies think about building their brand directly, building out their digital and social marketing efforts, as well as direct distribution when it makes sense for the product and category.
So, given that you have this wide range of companies you invest in, let's focus on ones that are, food-centric.
Yep.
What do you look for in portfolio companies, and kind of what's your investment thesis that you're trying to, catalyze through these investments?
Yep. So we're less thesis-driven, more product-driven, and hopefully it doesn't sound generic, but the product has to taste great, and we have to be excited about it. And we take a focused approach, investing in probably 4 to 7 companies a year, and we plan to be very actively involved partners and supportive. We let our entrepreneurs run their business, but try to find ways to support through team building, through marketing support. And so we want to partner with brands that we're really excited about and products that we love. So we look for an exceptional product and hopefully catching it at an inflection point where there's emerging customer love in the marketplace, that they have an interesting, compelling early selling story. And a lot of times in food, that's in the natural channel and rooms to expand points of distribution, as well as a lot of opportunity for continued team building to execute.
So, that can be hard, right? Taste good. Right now we have so many segmented consumer groups like, I'm not ketogenic. I try a keto cookie.
Yeah.
How do I know it's the best tasting keto cookie?
Right. Well, you get out there and you talk to the consumer and and make sure that there's a good group of customers where the brand is really resonating, the products are really resonating, means something to that consumer base, and hopefully that's a big enough pocket that you can build a couple $100 million brand. And so. That does mean that, you look at products, what we liked about Califia Farms is that it fits in the better for you space, plant-based. So Califia is one of the leading plant-based beverage platforms. And they use artisanal processes at scale to make really exceptional products, but it's priced at a premium, but not an accessible premium. So it's only about $1 more than the commodity players in the space, but it really delivers a special kind of exceptional product that kind of has a mass taste profile. And so there's a lot of products that you can see kind of bridging that gap from what used to be kind of crunchy or too hippy-dippy in taste profile or too diet-centric, where a lot of the brands have done a nice job progressing and kind of bridging that gap where a lot of these better for you brands have really tremendous market opportunities.
The thing I love about Califia is that you would now have milk and cookies. That your profile on the firm website notes.
Yeah. So
I might lean towards the cookie part. You have a pretty stellar cookie brand.
Yeah. So Leven?
Who doesn't?
Yeah. So Leven is a bakery that's been around in New York for, I think, 23, 24 years. Their original location is 500 square feet on Upper West Side, and there's just consistently big lines out the door. I think it's the #1 place to eat in New York on all of TripAdvisor, and so boils down to...
My sister-in-law lived around the corner,
Yeah.
which was really dangerous whenever we went to visit.
Well, I mean, it's as simple as, people love cookies, and I think there's a pocket in terms of we like to invest in better for you products, but also just like to invest in stuff that people love. And cookies, particularly at retail, so Leven, you get the warm cookie, people break it open and they share it with their friends. It's a fun experience, and it's an emotional category. And there hasn't been, a lot of the innovation has been on the better for you side, but people, we're all human beings. We still indulge with
And
great frequency.
there are ingredients that if you as a consumer read that list, you understand, like
Yeah, there's
butter,
only
flour,
6 or 7
yeah.
ingredients in the cookies.
So, I could keep talking, asking you questions for a long time, but one last question to end on. So you guys invest in tech and you invest in food.
Yep.
How important is it for food companies to have an e-commerce side of their business, to have an online side of their business, whether that's, a shop or just strong social media presence?
Yeah, I think it depends on the category and depends on the product. When you look at personal care and beauty, it's lightweight. People really care about it. It's emotional, so it makes sense to start e-commerce very early. If you look at a refrigerated products category, it probably makes more sense to spend your time on social and digital marketing and use that to drive velocity and create kind of that consumer pull at retail. And so it depends on the product category. I think that in early stages, probably you want to make sure that your brand and your is set up to scale digitally, that you have a great, because it's online is a great opportunity to tell your brand story, to explain why your products are differentiated, to provide the transparency around ingredient profile, around manufacturing processes that are meaningful to the consumer. And I think that's for early stages, that's the most important thing to do, because you want to create that selling story at the early national grocers. That's the most important. You don't want to overcomplicate it, trying to figure out how to, ship $3,000 a month of, snacks to, all across the country through a 3PL. But I think that also building in the direct-to-consumer piece of the business is compelling as well. It just comes down to resources and capacity.
Who knew shipping refrigerated almond milk was harder than shipping lip gloss? But
yeah, right.
Well, thanks so much for joining us. Unfortunately, I think our time is up, but I'm sure we'll catch up offline. And,
all right, thanks for having me.
Great to hear about the portfolio.
All right, thanks, Carol.
Thank you.